Crypto snipers, how are you? Yeah, time to check in with you. I'm going to do a FaceTime one for crypto snipers at the moment. So, one of the benefits of what we do, because we're method orientated and not specific market orientation, as bigger interest as we do have in the crypto environment, we're seeing what's going on around us. And here's what's happening in a very short, for the non economic of you that just need top line, just give me what's the lowdown. Basically, the global economy is in dire straits. All the major economic blocks are slowing down. Some of them never got started. Think the Eurozone. The US is slowing down. The Eurozone is sick as a canary. And China is in proper problems. So when you look at all of these things, we're in a globally weak environment. You've got the Australian house prices, for those of you that think I forgot about that. Follow our reset channel, the Reset Sniper, to be up to date with some of the control structure elements and property prices, etc. as well. That way I can just stream that stuff to that channel and know that you'll still be finding it. Also remember to hit the bell, by the way, you'll get the alerts for when we're doing stuff. But anyway, back to cryptos. So that's what's going on in the big world. I'm expecting at some point equities in this next recession could lose 40, 50, even 60% in a downturn. It's truly possible. And in fact, if we go into the full-blown reset, where things cascade, which I do feel the next major one could indeed be, you got to remember now we're 11 years out of 2018. The yield curve has inverted. Many of you who are not economic won't know what that means. Basically, it just means 3-month debt, the amount the government pays on 3 months debt, taken from the amount they pay on 10 years debt. A 10-year T-bill versus a 3-month. Normally you have a positive value. In other words, the longer the debt, the more it's inclined upwards, the more interest you get paid for holding a longer term. In other words, there's a benign expectation of increasing inflation. That's how control structures steal from you and drag you into higher tax brackets. They engineer an environment of not out of control, but consistent increases in inflation, so that the buying power of whatever you earn gets whittled away and you get dragged into higher tax brackets because you're getting paid more, but you're not really growing in real terms. That's how control structures are organized, so that they can always just be giving you tax cuts and introducing new taxes, and they skim you by destroying your money. And then by proliferating and expanding credit and increasing money supply, they reduce the buying power. And that's the game. That is in fact the game. And that is why you're in cryptos potentially. But don't fantasize either. Remember what I've said about forks and all of that. That's just expanded proliferation. You see, the rules you think have changed, but in some ways they remain the same. Anyway, so on all of these points of order, what is the comment about the crypto markets? Well, in this environment, we're likely to have a contractionary period where banks are not going to be doing much lending. They may even want paying off. You've got, as I've mentioned, we've got a globally synchronized economy where everybody is a leper in the leper colony, including countries like Singapore, which say it's so hard we have to destroy currency because otherwise our currency gets too strong and it kills our natural trade. We can't have domestic food, we can't have domestic suppliers, we have to rely on everything outsourced. No one wants to do that, but our currency will appreciate too much. You have Switzerland having a property boom they don't really want to be in, because too many Europeans are buying francs and dumping euros, which was part of what caused the original Greek crisis. So they have to have super low interest rates so that they're paying very little. Don't come and deposit money. We aren't going to reward you for it. Negative interest rates on government debt, etc. Please don't buy more of our government debt. We're going to take your money for buying it. So this is the insanity of the environment. So essentially what's happening is a contractory phase is probably due. This might take a while to bite. It's normally about 311, roughly a year. just under a year before a yield inversion on average leads to a recession. This one might be quicker and faster. I have my suspicions. I would bias to the shorter side, but you can call these things only for them to print and extend a little longer and keep faking it and bluff and buy some time. But in the long run, they're going to. There's no escaping. So the yield inversion means people are being. So many people are afraid and removing money and buying the long-term government debt to park money up in no-risk assets. Well, of course, that's the biggest joke, because government debt is going to eventually be the go-to-zero asset. But initially, when you contract, governments always supposedly stand by their debts. America will never default. They won't default honestly, but they default through hyperinflation and other techniques, so don't worry. But in the meantime, supposedly, it's your money can't get lost. It's safer than being in a bank, that even a bank could get lost and be bailed out, and you'd only have, if the deposit insurance schemes actually worked, your first $250,000 or £80,000 or $100,000 protected. So this is what's going on. Now, what does that mean? So first of all, most cryptos, with possibly the exception, believe it or not, of Bitcoin Cash, which has been a little bit perky, but most cryptos are looking like they're on grind lines, in reversal structures. You've got Ripple that's stinking. Looks like it's in a descending triangle stroke inverted HVF structure, although the target would take it below zero, so it's not a feasible one for target trading, but it is a structure for downside breaks. Bitcoin is looking like it's in a rising wedge on this period of high. It's been in a stagnant weekly grinding, clawing its way up. It looks like at least a stab to the downside, maybe not a full-fledged break from this point, but a stab to the downside and bleeding out a little bit is more likely on the cards than any form of mooning. Forget your FOMO, protect your capital in crypto generally. And Ethereum is on a grind line. Technically, I've been looking just quickly past all of these because I've just been having a watching remit. I've largely been standing back. This has been a consolidatory phase. We had an amazing run from the 6,065 down to the threes, and we make sure we don't give that back, trying to trade a breakout in a congesting, consolidating and constricting market. It's not the time. You see, you've got to choose your time for shooting, and you've got to choose your time for harvesting, and you've got to choose your time for picking, and it's not the season. So we've been sitting back. We've been looking at some of the equities that can be picked off to the downside if we get fall. We love Tilray, the other crypto, the cannabis stocks, that particular one on the short side. Go check the Market Sniper for that channel. Anyway, so cryptos could start to get a little bit interesting, but maybe it could be weakness. I don't think it's going to be the major spill. I think we're going to have weakness and a drift down, and we're going to continue consolidating for a while, and then potentially there's going to be either a break to the up or the down. And my fear is, here's the thing, everybody expects cryptos to be inverse correlated, to be this thing that moons in this virtual world when all else is failing in our current physical reality of fiat world, stock markets and bonds. And actually, I'm afraid I don't buy that narrative. That's fantasist. We've got to avoid being believers. We've got to avoid being evangelists. Don't be an evangelist about crypto. It's a belief system. Belief means something you've accepted without being reasoned into. The people that own assets, when they panic and need cash in the bank, and they want cash out of the banks under their mattress, and they want to be hoarding a bit of gold and making sure they aren't caught short, and all their assets they're reducing to what they consider to be safest. When they are forced sellers, when their salaries are being cut, their extra time jobs, their work hours are being cut, they're back on a 0-hour contract getting 0 hours, guess what? When it comes to having to meet the rent and to put food on the table, you sell whatever you need to sell. So when things contract, as I'm talking, and this is why I gave this preamble about the macro and the economic environment and the timing of where we're at now, if the stock markets start crashing, don't cheer it as a positive for cryptos necessarily. It won't necessarily be, because the same people the control structures and the elements that are in there, and even others that are in crypto may also be involved. Their mutual funds are going down, and even if they aren't in the other markets, let's say they're just crypto investors, and you differentiate from these hedge funds, these institutions, these people who invest in mutual funds, you're a non-believer. Guess what? If the jobs are going, if the economic contraction is coming, the loans aren't being granted, the leases aren't being extended, the contracts for contract staff isn't being renewed, that is a contraction. It doesn't matter if you're invested only in crypto. If your job hours gets cut, you need your money. And that's why my suspicion is not inverse correlation relationship to fear and contraction, but highly correlated. In other words, the rest of the world shits the bed, you get runny stomach too. And I'm sorry for the analogy, it's getting smelly around here. But I will say I expect that to be the case. So don't celebrate the fear. It might hurt you more than you realize if you're just crypto centric, and we can't help that. And there is a possibility, as we've said before, of another sell-off in cryptos, and it could be associated with a major contraction in the economy. So you could actually have Bitcoin have its own major melt up boom, and then major crash element, and then it could unfortunately be trying to recover or base out as the rest of the world, and it could be dragged down lower with it for a second time, and we could see continuation. And we've said before, there is structural patterns for against gold ounces, pound and euro, for it to trade sub £1,000, sub €1,000, and approach there on dollars, and maybe just dip with a bit of overperformance on a dollar side too. That scenario has not been closed, it has not been invalidated, it remains an open option, and it could be associated with a major downturn generally economically in the real world as well. So don't expect inverse correlation. This is my warning method. If you want to learn more about what we do and how you can make money when very few things are going up in this environment, where do you put your money? Very few things are going up. How do you protect your capital? And also, how can you actually attack and make profits? Come over to the webinar on themarketsniper.com. Go reg there. Check your spam, by the way. Also on the YouTubes. Remember to link. I'm going to start doing some stuff on Reset Sniper. Very, very interesting stories on the control structures and narratives and what I see is happening. You've got to go reg and sub on the Reset Sniper if you want to be kept abreast with that. Hit the bell so that you get notified. And I look forward to doing something technical for you in the not too distant future on Crypto Sniper. But this is just an overview. Many grind lines to be broken that are under it. That's a technical term of HVF method. You don't need to know the like of it, but it's kind of rising lows in a very uniform manner, which are very weak and actually point to a sell-off across Ethereum, Bitcoin, Ripple, etc. And these are the big market cap coins. Okay, with that, I love you and leave you. Enjoy your weekend. Get some quality time in. Remember, life's to be enjoyed, and preserve your capital. Look to make gains in an environment where many others will be losing immense amounts. Speak to you later and enjoy. Bye.